Good afternoon, and thank you all for standing by. For the duration of today's conference, all participants' lines are on a listen-only mode. Today's conference is being recorded. If you have any objections, you may disconnect at this time. It is my pleasure to introduce Ms. Teresa Green. Thank you, ma'am. You may begin.
Thank you. Good afternoon, everyone, and welcome to today's COVID-19 Affordable Housing webinar session. My name is Teresa Green, and I am the Community Affairs Specialist in the Kansas City Metro for the FDIC. I will be your host for today's call. I would like to remind everyone that the agenda for today's discussion is available on the registration website. During the webinar, we will discuss helpful resources such as the FDIC's Affordable Mortgage Lending Guide and HUD's programs and resources that are now available as a result of the CARES Act. A recorded version of this webinar will be available by the end of the week. All registered participants will receive email instructions on how to access this recording. The chat session is now open so that you may ask questions to the presenters during our webinar. And also, you may ask questions during the Q&A session. We will answer your questions during the Q&A session at the end of the presentations. Again, my name is Teresa Green, Community Affairs Specialist, FDIC. I will now begin my presentation of the FDIC's Affordable Mortgage Resources. The FDIC has a resource page called the Affordable Mortgage Lending Guide and Center. It is available by going to the FDIC.gov website. Then click on Consumer Protection. Next, click on Community Affairs. And last, click on Affordable Mortgage Lending Center. The website provides tools that can be used by real estate professionals, home loan counselors, financial coaches, and other agencies assisting clients with their home buying and improvement efforts. The red arrows on the slide shows how to access various sections of the Affordable Mortgage Lending Guide. The user would simply click on Part 1, for example, to access this section of the guide. The FDIC created the Affordable Mortgage Lending Guide, which is a three-part series of publications that identifies key resources for affordable mortgage products. The other red arrow on the screen shows the link to one of the federal agencies that offers affordable mortgage programs. The three parts of the Affordable Mortgage Lending Guide are Part 1, where it discusses federal agencies and government-sponsored enterprises. Part 2 talks about state housing finance agencies. And Part 3, where it discusses federal home loan banks. The guide and the center are technical resources to gain an overview of a wide variety of programs, compare different programs, and to help identify the next steps for program participation. Part 1 focuses on federal programs for single-family housing that support home purchase, refinance, manufactured housing, and some home improvement lending. It covers programs that are targeted to a variety of communities, including rural areas and Native American communities, as well as low and moderate income individuals, first-time home buyers, and veterans. The Affordable Mortgage Lending Guide, Part 2, describes the programs and products offered by state housing finance agencies. Since each state housing finance agency has different products, Part 2 provides general information on mortgage products and programs. Many of these products can be used in conjunction with other federal and government-sponsored enterprise programs, as well as federal home loan bank products. Part 2 also includes individual summaries of each state housing finance agency that lists specific programs and services offered. Part 3 also includes individual summaries of each federal home loan bank that lists specific products and services. Now I am going to talk about 3 links that I believe you will find most useful. The first is the state links for housing finance agencies, which provides an easy access to specific affordable housing programs and products offered by each state housing finance agency. Each state sheet also provides important contact information for your state housing finance agency, as well as other local sources of information. Click on your state or territory of interest for additional information. The second quick link that I would like to highlight is noted by the red arrows, as it provides easy access to specific affordable housing programs from federal agencies and government-sponsored enterprises. It includes programs and products that support home purchase, refinance, manufactured housing, and some home improvement lending by banks. Below you can find direct links to specific products for affordable housing. The last quick link that I would like to highlight is the activities and events, where you will find previous webinars conducted by the FDIC and upcoming conferences and events. The activities that you find on this page are often held in conjunction with other federal, state, local agencies, and community organizations. For those of you who are not aware, the Kansas City AEI supports economic inclusion initiatives with a large and diverse network of community leaders. To find out more about the Alliance for Economic Inclusion, please go to the FDIC's homepage. Click on Consumer Protection, Community Affairs, and last, AEI. Here is how you can access the FDIC's Affordable Mortgage Lending Center. The contact for questions about the Affordable Mortgage Lending Guide is shown here, as well as my contact information. I hope you find these resources helpful as you navigate through the many products and programs currently available. Thank you for your time. For those just now joining, hello and welcome to today's webinar. Thank you for taking time to join us. I'd like to introduce our next presenter, Samuel Jaron. He is an attorney advisor for HUD's Kansas City Office of Regional Counsel. I will now turn the presentation over to Mr. Jaron.
Hi, everybody. Thanks for joining. My name is Sam Garin. I am an attorney in the HUD Region 7 Kansas City office, and I'm going to be talking about the CARES Act and some of the benefits for HUD participants in our programs. I wouldn't be an attorney if I didn't give you legal citations, so at the top of each one of my slides, you'll be able to see section numbers underlined. Here, the overview is sections 422 through 4024. The CARES Act provides a lot of funding for programs, but we also have a few other benefits for HUD participants, both persons and properties. So I want to go over those very quickly. And I also want to kind of provide a little more detail on some threshold issues to make sure you qualify for the assistance under the CARES Act. Broadly, the CARES Act will provide forbearance on mortgage interest, foreclosure protections, and eviction protections. I want to highlight that the eviction protections only apply to breaches of a lease or rental agreement that relate to non-payment, and that non-payment issue or hardship must be related to the COVID-19 virus. Further, the CARES Act benefits I'm going to talk about today only apply if you're a person or a property assisted by HUD. Into a little more detail, projects under our single-family mortgage insurance program get benefits under Section 4022 of the Act. Those benefits are a foreclosure moratorium and forbearance on single-family borrowers' fees, penalties, and interest. The foreclosure moratorium will last until May 18th, 2020. However, it is extendable. And the forbearance benefits are for 180 days, but that's also extendable. Under HUD's multifamily mortgage insurance program, Section 4023 of the Act provides mortgage payment forbearance as well as renter protections against eviction. The forbearance benefits will last 30 days, however, that's extendable. And the renter protections are as follows. If a property has elected to has taken the benefit of our mortgage payment forbearance offerings under the CARES Act, no notice of eviction can be provided during that forbearance period. This notice period is usually 30 days. The eviction moratorium in the CARES Act provides a benefit to a large number of HUD programs. In the Act itself, the programs are identified under the Violence Against Women's Act, Section 41411A, but I've provided them in the box below since most people are not familiar with those programs offhand. The benefits in the CARES Act are in Section 4024. Those programs assisted by the eviction moratorium are Section 202, Section 811, HOPWA, Continuum of Care, Home, Section 221D3, Section 236, and then our Section 8 programs, both project-based rental assistance and vouchers, and then our public housing. I've used acronyms here because the next presenters, my HUD colleagues, will be providing more detail about each HUD program and how it's benefited under the CARES Act. The eviction moratorium mentioned in Section 4024 will last until July 27, 2020. As my final slide, I want to present my name again in case you needed to reach out to our office. You can reach out to me if you have questions about the CARES Act. Our future presenters will provide more detail on individual benefits and explain some of the financial benefits in the CARES Act. Thanks so much for listening. I hope this has been enjoyable.
Thank you, Mr. Jaron, for your expertise regarding forbearance, foreclosures, and evictions. Our next presenter is Hillard Berry. He is HUD's Senior Community Development, Planning, and Development Representative. I will now turn the presentation over to Mr. Berry.
Thank you, Teresa, and thank you everyone for joining us this afternoon. Again, my name is Hillard Berry, and I am your tour guide for a very brief overview of CPD's programs and associated CARES Act funding. The organizational structure of CPD consists of several programs, many of which you may be familiar with. The Emergency Solutions Grant Program, the Continuum of Care, the Community Development Block Grant Program, which is our flagship program. We've had it for many, many years. And under the CDBG program, we have disaster recovery grants that the state of Missouri is the recipient of many of those, so you're familiar with that. The Section 108 loan program that is used basically for economic development. We also manage and administer the Home Investment Partnerships Program, the Housing Trust Fund, the Housing Opportunity for Persons with AIDS Program, and the Neighborhood Stabilization Program. Specifically related to the CARES Act and COVID-19, we have CDBG, CV, ESG for the COVID, and HOPWA, CV. As some of you may know, we have two types of grant programs. We have formula grants and competitive grants. The formula grants, the funds are allocated by Congress, and HUD calculates the awards based on socioeconomic indicators, population, poverty data, housing, age, density. we announce the grant amounts, and our division processes, reviews the grant applications, as we call them action plans, and we process the grant agreements. We also have competitive grants, and HUD publishes a notice of funding availability. The recipients, who are mostly in the continuum of care program, but we have others also. The recipients review the applications, review the notices, we review the applications, and we announce the grant awards, and we process the grant agreements at the end of that process. We have the Emergency Solutions Program, which addresses and prevents homelessness. We provide funding for homeless shelters, homeless prevention activities, and it involves subrecipients, local nonprofits, faith-based organizations, and we coordinate largely with the local continuum. Continuum of care grants, they are competitive. They are the competitive grants that I referred to earlier. They also address and prevent homelessness. They're organized into local and state continuums, which are basically governing bodies that provides housing and client support services. The ESG and COC funds are used in coordination generally and the COC works together to make that happen, to prevent and address homelessness. The grant recipients generally meet daily, and I know they are now, particularly under the circumstances. Okay, thank you. Then we have the Community Development Block Grant Program, which many of you are familiar with, that those funds are distributed to state and local governments for the improvement of housing and economic opportunities for low and moderate income individuals. There's a big difference between state and local governments in the program. The key differences, basically, states have a lot more flexibility, something we used to call maximum feasible deference. As I mentioned before, the CDBG program also has under it the CDBG Disaster Recovery Grant Program and the Section 108 Loan Program. Here we have the Home Investment Partnerships Program, another program to increase home ownership and affordable housing opportunities for very low income individuals. The funds in the Home Investment Partnerships Program are used for acquisition, new construction, rehab of rental, and homeowner housing. Another large component of the Home Investment Partnerships Program is tenant-based rental assistance. The program generally it always requires the involvement of what we call CHODOs, Community Housing Development Organizations. And we also like to see several pots of money of multiple sources of funding in projects that are undertaken by what we call PJs, participating jurisdictions within the Home Investment Partnership Program. We have the Housing Trust Fund also, and it's another housing program to increase and preserve affordable housing. The difference between some of our other programs and HTF is that this is funded by loans made by government-sponsored entities, Fannie Mae and Freddie Mac. It's not authorized by Congress. 80% of the funds must be used for rental housing, and the housing built with the HTF funds have a minimum affordability period of 30 years. Housing opportunity for persons with AIDS. This is pretty self-explanatory. It addresses housing and associated needs for people living with HIV/AIDS. 90% of these are formula funds, and 10% are competitive grants. It provides funding for client housing and their supportive services. Oftentimes we find a coordination with the agencies working in the continuum of care that I briefly described and the ESG programs. The Neighborhood Stabilization Program, we're trying to close this one out. It started back in 2008 as a result of the housing crisis. And here's some of the stats there. The funds were awarded between 2008 and 2010. The CARES Act, we have CDBG-CV, ESG-CV, and HOPWA-CV. All told, it's about $9 billion that will be provided to state and local governments. Approximately $5 billion will be distributed through the CDBG program and $4 billion through ESG. The numbers on this chart are a little different, but we're recalculating daily. Here are some specific numbers for the Kansas CPD CARES Act funding. The 11 or so formula grantees that we have in Kansas, starting with Kansas City on down to the state of Kansas. Kansas non-entitlement for all three COVID-related funding sources, CDBG, ESG, and HOPWA. Here are the Missouri CPD CARES Act funding for all 16 or so grantees that we have in the state of Missouri, from Blue Springs down to Missouri non-entitlement, which is the state of Missouri, for all three grant source streams of funding. CARES Act provides a great deal of flexibilities to states and local governments for the CDBG-CV program. The eligible activities are buildings and improvements, including public facilities, assistance to businesses, special economic development assistance, provision of new or quantifiably increased public services. That's really a big deal because the original CDBG program has a 20% cap on public services. That cap has been totally removed. Also, it provides funding for planning capacity, building, and technical assistance. And all of these activities are geared towards the activities that the state and local government deems necessary to address the COVID-19 pandemic. ESG, we have homeless prevention assistance, emergency shelter and outreach, and it's not subject to consultation and citizen participation requirements when the state or local government submits its action plan or application to HUD. CARES HOPWA, as a matter of fact, there's we may have more information this afternoon because there's also a webinar happening this afternoon for the HOPWA program that's being conducted by HUD. But for the moment, this is also available to state and local governments for assessing essential services and supplies such as food, water, medications, medical care, information, providing transportation, nutrition services, and providing lodging at hotels, motels, and other locations in order to quarantine people. COVID-19 regulatory waivers and statutory changes are what you might imagine, considering conditions and based upon suggestions by the CDC. The mega waiver, which covers all of our programs really, provides increased flexibility to grantees on property inspections, fair market rent requirements, clients, meetings, interactions, the collection of income and disability documentation. We also have a very streamlined process for grant amendments. This is particularly important for our COC homeless providers who are able to amend their 2018 grants, for example, in order to address today's situation. The grant, okay, COVID, that's okay, we can go to the next slide. The next slide, response and recovery, just outlines some of the dates and actions that have been undertaken. Our immediate response was to allow for the use of CDBG funds for testing, for building testing facilities and homeless assistance under the Emergency Solutions Grant Program. And after the CARES Act was funded, we briefly discussed some of the waivers and flexibilities provided to the programs. And we're expecting, I think I've heard our local congresswoman talk about Congress revening and coming up with another round of CARES funding. And that's, we expect that sometime in May to July 2020. And in August, we expect future appropriations, as everyone knows. The HUD Exchange is a huge source of information regarding all these programs, particularly in this very fluid environment. I suggest that everyone go there and take note of the information on this slide if you haven't already gone there. The coronavirus information is down at the bottom, hud.gov/coronavirus, and of course the HUD Exchange. Well, thank you very much for allowing me to be your tour guide and take you through this quick overview of CPD, its programs, and associated CARE Act funding. Thank you, everyone, and be well.
Thank you for that informative presentation on numerous grants and emergency funds. Our next presenter is Patty Bennett. She is a portfolio manager for HUD's Public and Indian Housing. I will now turn the presentation over to Ms. Bennett.
Hello, I'm Patty Bennett, and I'm going to talk to you about the public housing programs. There are approximately 3,300 public housing authorities across the country, serving roughly 1.2 million households. The Kansas City Field Office is one of 3 offices serving this region, the other 2 being in St. Louis and Omaha. The Kansas City Office of Public Housing services 221 public housing authorities in the states of Kansas, Iowa, and the western portion of Missouri. Through this presentation, PHA refers to Public Housing Authority. The table on this slide shows how the public housing authorities are broken down by program type. Public housing may be high-rise, multifamily, or single-family residence. The program participant applies to live in an available unit. In some cases, there are waiting lists for public housing. The Housing Choice Voucher Program is a voucher that the program participant can take to any landlord in the housing authority's jurisdiction that will accept a voucher. There are wait lists in most jurisdictions for a voucher. The 221 PHAs we service in the Kansas City office provide rental assistance to a maximum of 76,614 families. That is broken down by program type on the table on this slide. Most of the PHAs serviced by the Kansas City office are small. Many are one-man shops where the executive director may be part-time. They might have a part-time maintenance person on staff. Eligible families in both programs pay roughly 30% of their monthly income toward rent and utilities. The remainder is subsidized by HUD. The CARES Act provides $1.5 billion for the Housing Choice Voucher Program. Of that, $1 billion is for additional administrative expenses in administering Section 8 programs. $500 million is for PHAs that experience a significant increase in voucher costs. Since rent is based on income, many families will be paying less rent and the PHAs will be paying more. In addition, a recertification is necessary to change rents. HUD expects that housing authorities will have many recertifications as program participants lose their income due to COVID-19. The CARES Act provides $720 million for public housing. The payments are for the operation and management of public housing. Funds are distributed through the operating fund formula. The funds are to prevent, prepare for, and respond to coronavirus, including activities to support or maintain the health and safety of assisted individuals and families, and activities to support education and child care for impacted families. In addition, any unspent operating funds and capital funds from prior years may be used to help out during these times. Local housing authorities have made changes in day-to-day operations. Many employees are working remotely. Many small housing authorities don't have the computing technology they need to connect remotely. Work orders are on an emergency-only basis. All routine maintenance is being postponed. There is additional cleaning of common areas to reduce the spread of COVID-19. Many of our public housing units are high and low rises. Many of those house elderly and disabled. Public spaces in the buildings are closed. Housing authorities are often counseling tenants on why it is important to stay in place, why visitors may be limited. Some don't understand the virus. PHAs with elderly high-rises may be starting a food bank within the building for those that cannot go out to get food and other necessities. The Office of Public Housing is tracking how operations may change during this pandemic. The CARES Act provides for flexibilities that allow PHAs to modify their operations to ensure the safety of residents and employees. This allows PHAs to respond quickly and without worry about many of HUD's rules and regulations. Once legislation is enacted, HUD has to apply the legislation and inform public housing authorities how it will work. That is often done in the form of a PIH notice. On April 10, 2020, HUD published PIH Notice 2020-05. That notice is 48 pages long with an appendix that is 15 pages. The notice covers waivers for public housing, housing choice voucher, as well as Native American housing. This notice is important because it allows the housing authorities to operate during this pandemic with fewer and more relaxed HUD requirements. Slides 7 through 9 outline a few of the more relaxed guidelines in the waiver. There are many waivers. I'm going to go over just a few of them for you. The ones I'm going to discuss are highlighted on the slides. The delay of annual re-exams is important because program participants may not be able to get documentation that is required to certify income due to the pandemic. Housing Choice Voucher agencies can accept owner certification that there are no life-threatening deficiencies. This will help the PHA inspectors that have to go into the units to inspect, often with others present. The PHA is not exempt from inspecting the units. They want to ensure the safety of the program participant. The waiver states the units must be inspected no later than October 31st of 2020. The waiver of the requirement for an oral briefing is important. Oral briefings for the Housing Choice Voucher Program are often done in a group setting. PHAs can brief potential program participants over the phone or give them an expanded packet of information in lieu of a group briefing. Many PHAs I've spoken to are using phone briefings. This takes longer because each one is generally individual rather than group. Voucher extensions allow the potential program participant longer time to look for a unit. Utility schedules are time-consuming to update. Delaying that during the pandemic allows the PHAs to spend their time working with clients. HUD scores PHAs in order to determine on a high-level basis how the PHA is managing its programs. The PHAs may retain their most recent HUD scoring. HUD will allow PHAs to be scored again if the PHA requests. This is important for troubled or near troubled housing authorities. All open grants will automatically be given a one-year extension on expenditures. Due to the pandemic, service providers may not be able to perform. The Native American programs have been given $350 million to prepare for, and respond to the coronavirus. The Native American programs are serviced out of the Denver office in Region 8. At the Office of Public Housing, helping our PHAs is always our job. Currently, assistance to PHAs is our primary function. Our PHAs are in the front lines assisting potential and current program participants. They are helping many of our low-income, elderly, disabled, veterans, and homeless. The Office of Public Housing is ready to assist these agencies in any way we can. And this concludes the presentation on the Office of Public Housing and the CARES Act.
Thank you so much, Ms. Bennett, for that educational presentation on public housing and Native American programs. Our next speaker is Charles Miller. He is a Housing Program Director and Asset Management Branch Chief for HUD's Region 7, Kansas City. I will now turn this presentation over to Mr. Miller.
Good afternoon, everyone. This is Charles Miller, Branch Chief in the Kansas City Satellite Office. And we are part of multifamily housing, and so my region is the Southwest region, and it actually serves 9 states. And so it's Nebraska, Iowa, Kansas, and Missouri, plus the southern states of New Mexico, Oklahoma, Arkansas, and Texas. We have offices in Kansas City, which is the satellite office, and then our main office is in Fort Worth, Texas. And so multifamily has 2 main program activities. One is financing and lending, and the other is rental assistance. And so the financing and lending arm is really comprised of 3 main areas. We have FHA mortgage insurance. The second is direct loans. And then we have capital advance grants. We also have rental assistance. So a large portion of our portfolio has project-based rental assistance. So multifamily is slightly different from public housing, in which we provide rental assistance to properties, but it's to an individual property owner, and so the rental assistance is there at the property. So an individual would apply for the assistance when applying for an apartment. The rental assistance types that we have are housing assistance payment, which is traditional Section 8, and then we have project rental assistance contracts, and then a PAC, a project assistance contract. Now, our lending programs and our rental assistance programs routinely overlap, and so we could have FHA projects that also have project-based subsidy. Our direct loans and capital advance grants all come with a rental assistance contract. And so in multifamily housing, we have 3 main stakeholders. The first, mortgage lenders. Those are the banks. We really won't dive too much into the bank's role in multifamily housing in this presentation, we had a presentation for our FHA multifamily mortgage lenders last week. And so this will focus primarily on owners, and I'm grouping owners with management agents and then also with the residents. And kind of going through the presentation, everything is somewhat color-coded. So when you see the green, it's speaking to owners, agents, and then when you see blue, it's referring to residents. And so the main FHA lending program we have, or financing program, is FHA mortgage insurance. And so we have loan programs that provide for the new construction or substantial rehabilitation of a project. And so those are our Section 220. Those are urban renewal projects. 221 D4s, which is just standard new construction. 231, which is housing for elderly persons. And then 213, which are co-ops. And then we also have loan programs for the refinance. So if an individual owns the property and was just looking to take out new debt on it, but then we have acquisition, in which an individual could purchase an existing property with the loan program, and those are 223F and 223A7. Now, FHA loan program, the benefits is that it's long-term, fully amortizing fixed-rate debt, and so there's no balloons or variable rates with the FHA mortgage program. Loan terms on those for new construction and sub-rehab can go up to 40 years, and for the purchase refinance can go up to 35 years. Our FHA loans are generally secured by Ginnie Mae securities, and the debt is non-recourse, and so the borrower does not have their personal assets intertangled with the development or used as collateral. Our multifamily programs work for both profit-motivated or nonprofit ownership, and then we can easily blend the FHA programs with secondary financing sources, so low-income housing tax credits, CDBG funds, Federal Home Loan Bank funds, et cetera. And FHA programs exist for renters of all income ranges. And so we have market rate projects, and then again, we can pair the program with subsidized housing as well. And with tax credits, you have housing for low-income individuals, but there's not direct subsidy. We also have our rental assistance programs, and so that's the main one is the project-based Section 8. And so through all the rental assistance programs that we're going to talk about in this presentation, the household would pay 30% of their adjusted income toward rent, and then the remaining 70% is paid by the subsidy. And again, the distinction between multifamily housing is that the subsidy contract is with an individual property owner, and so the prospective tenant would apply at the apartment complex for the subsidy in the unit. The program highlights, or the main highlights for our Section 8 program, is that it targets low-income individuals, so individuals at 80% or lower of area median income. Some of the programs actually have a narrower income band and look at very low-income individuals at 60 or 50% AMI. Our subsidized properties do have occupancy restrictions, so some projects are designated as family, where anyone 18 years of age or older could apply. We also have elderly projects targeting individual heads of household 62 years of age or older, or housing for persons with disabilities. Now, the 30% of income that an individual pays for rent normally includes the utilities. There are properties where the utilities are separate, so the tenant pays the utilities privately, and in those properties there's what's called the utility allowance, in which an individual gets a monthly reimbursement for utility expenses. And the minimum rent at the project, so if a household had zero income, they would still be responsible for paying $25. And so I just wanted to give a quick example of how rental assistance works, and we're going to take another look at this later on in the presentation. But we say Bob the builder lives in an apartment complex where the rent for the unit is $800 per month. And so the $800 is not what Bob is going to pay with the subsidy. And so Bob currently works 100 hours a month at $12 an hour, so he has an income of $1,200 per month. And so his rent would be 30% of his income, so not 30% of the rent, but 30% of his income. So in the table you can see Bob's income is $1,200 per month, and so his rent payment would be 30% of that. And so Bob's payment to rent would be $360. The total apartment rent is $800. So the HUD subsidy, rental assistance, would pay $440 of the rent. And so we also have mutually inclusive programs that include HUD financing and HUD subsidy. The first is the Section 202 direct loan. This is housing for the elderly or persons with disabilities, and it includes the Section 8 contract. HUD is the lender on this, so the mortgage payments are paid directly to HUD. This program actually ceased in the early 90s and was replaced by the 202 capital advance. And on this project type, instead of it being a loan from HUD to develop the project, it became a grant. And so the project receives rental assistance through a PRAC, but there is no debt service on this particular project. And so when we're looking at COVID-19, it's taken a toll on the health and safety of individuals, but there's also been a financial impact. And the financial impact in the multifamily industry really starts with the residents. And so individuals in this economic downturn have lost wages through loss of employment, reduction in hours, or in certain new fields, just reductions in opportunities. So Uber drivers or certain delivery drivers are not, their business has declined based upon stay-at-home orders. And so it's a trickle-down effect or a triple-up effect. And so residents have less take-home pay. And so in some cases, individuals may not have enough money to pay rent. And so when enough individuals don't have enough money to pay rent, in turn, the owner's collections go down, and so they have less money to pay the debt service. And so it's somewhat of a snowball effect. And so we do have some cures and some relief under the CARES Act. And so the CARES Act provides additional funding for, it's $1 billion in support for Section 8. And then they also provide $50 million in support for 202 supportive housing. And so looking at the earlier chart, we talked about 202 capital advance. That would be for those projects. The 202 direct loans are considered Section 8 properties, so they would be under the $1 billion. It also includes $10 million of support of on-site service coordinators, and those are individuals employed by the property to help the residents with coordination of services. So coordination of transportation oftentimes, medical services, and just general quality of life coordination. And then there's $15 million for the Section 811 program for persons with disabilities. And this funding is for rental assistance. And so we'll take another look at Bob the Builder and how he was affected by COVID-19. And so he still stays at a subsidized property where his rent is $800 a month. But instead of being able to work the 100 hours per month, Bob's employment has gone down to 60 hours per month, and he still makes $12 an hour. And so Bob's income has been reduced from $1,200 per month to $720 per month. And so when we look at his rent payments, there's an adjustment. So Bob's income is now $720, but his rental payment is still only 30% of his take-home pay. And so Bob's rent or payment to rent has now gone down to $216. And his total apartment rent remains the same at $800, so the amount of subsidy has increased to $584. So the CARES Act funded additional money to the subsidy programs because there's an expected increase in usage of subsidy as individuals' employment income goes down from COVID. We also have other programmatic relief under the CARES Act. Owners who may be having operating shortfalls, we talked about owners who may have reduced income under the program to pay the mortgage lenders, they can suspend the reserve deposits, or they can borrow money from the reserve for replacement to cover operating costs. And all FHA-insured mortgages have reserve for replacement accounts, and those are generally set up to take care of capital expenditures. On the tenant side, tenants that have lost income for COVID-19, so in Bob's case, his income went down, he would do a interim recertification, and it allows individuals to self-certify for the certification. And so they would be able to get their rent changed quicker than needing to go out and do third-party verification with employers. There's also signatures. Because social distancing is in place, it allows an electronic signature to be used temporarily, where the individual would then have to fully sign 90 days after the termination of social distancing orders. The CARES Act also provides additional relief. As Sam made mention in his presentation, there's forbearance of residential mortgage loans. And so owners who are unable to pay the lenders, and if the reserve loans weren't sufficient to cover operating costs, they could seek forbearance from the lender. And so the forbearance is a deferral of a mortgage payment. And so going into May, if you had your May mortgage payment forbeared, you would not make the May mortgage payment, and it would be tacked on to the end of the amortization. And so it allows, Section 4023 allows forbearance up to 90 days. It starts off with a 30-day forbearance and then 2 additional forbearances if the situation requires. But forbearance does require negotiation between the owner and the lender. And for tenants, Section 4024 provides temporary moratorium on eviction filings. And so earlier we looked at Bob the builder who was receiving subsidy. And so Bob's loss of income was able to be offset by an increase in subsidy. Lots of individuals who reside in FHA-insured properties may be market renters, and so there is no subsidy available to take care of a portion of their rent. And so the CARES Act has allowed the moratorium on evictions, so if a market renter was unable to pay, they would not have the stress of needing to move out from eviction. It puts the moratorium where they would be able to make up their rent payments later on, and it also provides relief where late fees for individuals who were adversely affected by COVID would be waived. And so this is support for market rate renters as well. And so we, multifamily, have some additional information on our website for owners and agents and also tenants, and it's available under our housing program question and answer. And so the link is in the slide. And then for owners who are seeking forbearance, you can also look at the CARE Act Multifamily Mortgage Payment Relief Release. And so this is multifamily's press release on forbearance. And in that press release, there's an individual link with more information on forbearance. Now, if anybody has any questions multifamily related on a specific property, please feel free to contact us through our electronic inbox, and that is mfsouthwest@hud.gov. And sending an email to that box, it will be directed to the project's account executive, in which they will then respond to you. And again, I'm Charles Miller, branch chief in the Southwest Multifamily Region, and I thank you all for your time.
Thank you, Mr. Miller, for that enlightening presentation on rental and lending assistance that is currently available. Our next speaker is Carla Manzanares. She is a housing program officer for HUD's Denver Homeownership Center. I will now turn the presentation over to Ms. Manzanares.
Thank you, Teresa. Hi, everyone. Again, my name is Carla Manzanares, and I'm the Housing Program Officer in the Denver Homeownership Center Director's Office. I've been with HUD for 30 years, and most of my tenure has been in single family. A couple of our main responsibilities include ensuring single family FHA mortgages and overseeing the selling of HUD homes. We serve 17 states in HUD regions 5, 6, 7, and 8. HUD issues mortgagee letters to inform lenders about FHA operations, policies, procedures, and changes. Today, I'll go over the most pertinent mortgagee letters pertaining to COVID-19. ML 2004, which is effective as of March 18th, announces the foreclosure and eviction moratorium in connection with presidentially declared COVID-19. The foreclosure moratorium is for 60 days, which applies to mortgages in initiation and completion of foreclosures. Evictions are suspended for 60 days. In addition, deadlines for the first legal action and reasonable timelines are extended by 60 days. ML 2005, FHA made modifications to the re-verification of employment requirement. It includes verbal verification of employment for Title II forward and reverse mortgages, or HECMs. It's effective for cases that closed on or before May 17th. These policy updates are temporary, so HUD Handbook 4000.1 will not be updated. This mortgagee letter also allows for exterior-only or desktop appraisals and is effective for appraisals completed on or before March 17th. The purpose of ML 2006 is to inform mortgagees of special loss mitigation home retention options available to single-family borrowers, as well as an extension period for HECMs. This ML adds sections to the 4000.1 handbook under presidentially declared COVID-19 national emergency guidance, which include 1, forbearance for borrowers, and 2, national emergency standalone partial claim. Pursuant to the COVID-19 national emergency, upon request from the borrower, the mortgagee must delay submitting a request to call the loan due and payable for HECM mortgages. The initial request may be up to 6 months if needed, and an additional 6 months can be approved by HUD. ML 2007 is effective as of April 6th, and it introduces the FHA Catalyst, which is a new web-based platform that allows non-lender insured mortgagees to submit FHA cases electronically for insuring. In about 2 weeks, hundreds of lenders have onboarded to this new case binder module and have submitted over 2,500 cases. This is really exciting to me because the Denver Homeownership Center had a major role in getting this module developed, tested, and implemented. ML 2008 is effective as of April 6th. It introduces a new supplemental claim submission involving the FHA Catalyst that I just spoke about. It allows mortgagees to prepare and submit supplemental claim packages electronically. Submissions through this platform is optional. ML 2012 provides updated guidance for HECM Claim Type 22 assignment claims. The updates are temporary and in effect for claims submitted on or before October 30th of this year. This ML makes 3 key exceptions that apply to reverse mortgages during this national emergency. The first exception is the availability for alternate documentation specific to HECM assignment claim requests. To document taxes are current, HUD will accept a report from a tax monitoring service indicating that property taxes are not delinquent. To evidence that the homeowners association or condominium dues are current, HUD will accept a statement from the mortgagee that the HOA or condo dues are not delinquent. And in lieu of the annual occupancy certification signed by the borrower, HUD will accept an email or verbal certification from a borrower stating they occupy their principal residence. The second exception is an extension of time to deliver original notes and mortgages to the HUD secretary. In order to receive claim payment after receiving approval to assign from HUD, but prior to HUD receiving the original note and mortgage, lenders must upload a copy of the note endorsed to the HUD secretary with visible endorsement information into the Home Equity Reverse Mortgage Information Technology System, or HERMIT. Lenders must also complete the timeline step in HERMIT, original note and mortgage sent to HUD, and enter step note, documents delayed COVID-19, into the HERMIT timeline. The third exception is extension of time to deliver recorded assignments of mortgage to the HUD secretary for HECMs with case numbers assigned prior to September 19, 2017. For HECMs with FHA case number assigned before September 19th, mortgagees may also utilize an extension of time to deliver recorded assignments of mortgage to the secretary as soon as possible, but no later than 12 months from the date of claim payment. If the original note and mortgage aren't provided within that time, the lender must purchase the HECM loan within 30 days of receiving a defect notice from the department. If you work with FHA products, we recommend you subscribe to receive FHA info email notifications of important industry announcements such as new mortgagee letters, handbooks, policy notices, Federal Register notices, and events and training. Most of the FHA info notices listed on this slide are announcing the mortgagee letters that we already discussed pertaining to COVID-19, and I'll just highlight a few of the others. 2020 provides information on the continuation of single-family business operations during this time and provides a link to a temporary regulatory waiver of servicing requirements regarding face-to-face contact with borrowers. It announces alternate methods of servicers contacting borrowers, such as phone calls, emails, and video calls. 2022 provides information on a temporary waiver of HUD Handbook 4000.1 that provides an alternate way to submit condominium project approval packages. Usually we'd only accept them by snail mail, and since HUD offices are currently closed, submitters can create a PDF file of the package and send it via email to the FHA Resource Center. By doing this, FHA employees who are working remotely, they can still receive and process the packages. The FHA info also provides information on a waiver to temporarily suspend the requirement that FHA appraisers must complete damage inspection reports for properties pending sale or pending endorsement in presidentially declared major disaster areas due to COVID-19. Finally, 2027 provides a temporary waiver for HECM tax arrearages. It allows mortgagees to offer a recalculated repayment plan for unpaid property charges for HECM borrowers. This next slide lists FHA contact information. The FHA Resource Center assists with questions from consumers or industry partners. Our online knowledge base helps customers find answers 24/7 at www.hud.gov/answers. The phone number is 1-800-CALL-FHA, and all calls are answered from 8 a.m. to 8 p.m. Eastern Time, Monday through Friday. Questions may also be emailed at answers@hud.gov. Email messages will be responded to within 48 hours. Most of them are responded within 24, however. HUD-approved housing counselors provide advice on buying a home, renting, defaults, foreclosures, and credit issues. They can be searched by zip code at this link here, and the number to HUD's interactive voice system is 800-569-4287. HUD's National Servicing Center works with FHA homeowners and their lenders to avoid foreclosure, and their phone number is listed here as well. Lastly, you may subscribe to receive email updates with FHA info at this link. That is it for me. I'd like to thank you for your time, and I hope you all stay safe and well.
Thank you so much for that informative presentation. It's now time to take a poll. You can participate in the poll by clicking on the three dots at the bottom of your screen, then click Poll. Hold on 1 second while I open the poll. Okay, the polls are now open. In the meantime, we will start to answer questions that come through chat and also through the Q&A session. So if you also go to the dotted line, you can see the arrow pointing to the three dots. And then click on Q&A. So this will allow you to submit your questions via Q&A. You can participate by clicking on the three dots at the bottom of your screen and then click Q&A again. If we do not get a chance to answer all of your questions by the end of the webinar, we will contact you directly or send out answers to all of the questions by the end of the week. Mr. Shaw will now lead us with the Q&A session for this webinar.
Thank you, Ms. Green. The chat line is now open for your questions, and we have approximately 20 minutes for the Q&A session. The first question that comes from the chat line is for Sam. When does the eviction moratorium end?
Hi, I'm sorry if I wasn't clear on that. It's July 27, 2020.
Thank you, Sam. The next question in the chat line is for Patty. Are there any housing support services for homeless sex offenders? What programs will help them?
On this one, the eligibility doesn't change. The CARE Act does not change the eligibility requirements to enter public housing programs. There may be some community nonprofits that can help. If a person is on the National Sex Offender Registry, they're not eligible for public housing programs.
Thank you, Patty. I have another question from the chat line. Have any of the restrictions for veterans been loosened as part of the CARE Act?
Again, the CARES Act does not change any of the eligibility requirements. Veterans are referred into our VASH program for veterans through the VA.
Okay, thank you, Patty. The next question I have is for Hilliard Berry. The 90-10 breakdown is for all sections of the program or only for age-related as far as HOPWA is concerned?
Would you repeat the question, please?
On your slide, the HOPWA slide, you had the 90-10 breakdown from formula to competitive grants. Is that breakdown for all sections of the program or only age-related?
I'm not following the question. I'm sorry. Which slide are we referring to? The HOPWA slide and.
Yes, because you mentioned that there was grants, 90% are formula-based and 10% are competitive-based.
Yes, that's correct.
And they're wondering if, is that 90-10 breakdown, the formula and competitive, for all sections of the program or only for the age-related? So
that's all sections. All sections of the program are is broken down 90-10.
Okay, well, thank you, Hilliard. I have another question for you.
Has been a separate allocation for the HOPWA CV program.
Okay, and a follow-up question I have for you is, do the mega waivers apply to ESG?
Yes, they do.
Thank you, Hilliard.
You're quite welcome.
The next question I have is for Charles. Will the federal pandemic $600 be included in the tenant's income?
And so the stimulus money received, be it the $600, I know there's $1,200 and $2,200 or some of the iterations. Those are not considered in the income calculations. It's considered non-recurring and irregular payment, and so it would not be included in income calculations for the year.
Thank you, Charles.
Rick, this is Patty. With public housing, we just got a notification that the $600 additional unemployment money is not counted as income either.
Okay, great, for both programs in multifamily and public housing.
That's public housing.
Thank you. The next question I have is for Charles. It's related to the income-based housing for seniors and disabled. Is there a contact person or number to call for information when clients have conflict with management on site?
And so
or property owners?
And so there's a couple of different numbers depending upon the state, but the easiest number is to just contact our office at 913-551-5462. The operator will tell you based upon the project name who's assigned the property, and then you would be able to direct your call to that individual. Again, that number is 913-551-5462.
Thank you, Charles. The next question on the chat line is, can you please explain, I think it's for Sam, can you please explain how the VAWA is impacted by this? I didn't get that very clear.
Sure. So under the CARES Act, the programs that can benefit from the eviction moratorium are identified in VAWA in the section that I have on the slide. So I wasn't talking directly to the VAWA program. It's just in the Violence Against Women's Act, it lists a number of HUD programs, and those are the ones that are benefited by the eviction moratorium.
Thank you, Sam. The next question is for Barry. On page 22 of the presentation, the Emergency Solutions Grant provides funding for homeless prevention activities. Who would a local 501c3 nonprofit need to contact for more information on this funding?
They would need to contact their local COC Continuum lead staff person.
And how would they get that information?
They could go to the HUD Exchange under COC. They could also contact their local community planning and development office or community housing and community office. I'm not sure where this person is. Or they could contact the balance of state. Well, I don't know what state this person's in, but they could start with contacting their local governmental office that administers HUD programs. They could go to the HUD Exchange. That's the best approach I could give.
Thank you, Hilliard. The next question on the chat line, and this is for Charles, I believe. Does HUD promote small incremental developments, that is, small sixplex units?
And so FHA insurance can be used on sixplex units. The multifamily is 5 or more contiguous units at a particular site. There are some administrative costs with FHA financing, and so generally the threshold, depending upon income levels of the units or the rent levels of the units, is about 20. It was about 27 depending upon the area, but the small project size, the window to help distribute those costs for a moderately priced apartment, you really need about 40 units in order to make the program worthwhile.
Thank you, Charles. And while we're waiting for a few additional chat line questions, I have some other questions. Hilliard, this question is on CDBG CV funds. Can they be used to acquire and quickly rehabilitate, if necessary, a motel or hotel building to expand capacity of hospitals to accommodate isolation of patients during recovery?
Yes, they can. CDBG funds, COVID, can be used for the acquisition, construction, rehabilitation of buildings, facilities, site improvements, if it's directly related to the response to the COVID-19 pandemic. But I have to caution our grantees, if they're on the line, HUD headquarters is presently preparing some guidance on duplication of benefits. They're very concerned about the CDBG program being used inappropriately on top of other funds that are more readily available. So before anyone undertakes some of these activities, I suggest that you speak to either go to the HUD exchange and ask that question, look for guidance from your local CPD representative or your local community development office at City Hall.
Thank you, Hilliard. The next question I have is for Sam. As a public housing resident, can you qualify for eviction protection under the CARES Act if you are being evicted for destruction of property?
So no, that's one of those threshold issues I mentioned at the start. The eviction protections only relate to lease violations or rental agreement violations due to non-payment because of the COVID-19 hardship.
Thank you, Sam. And the next question is for Carla. How long is the foreclosure moratorium?
Hi, it's for 60 days, but it may be extended if warranted and approved by HUD.
Thank you, Carla. The next question is on the chat line, and when does HUD expect to publish the notices, Hilliard?
We don't know. We had a conversation with HUD headquarters regarding, are we referring to CDBG, the CDBG notice regarding the duplication of benefits? Is there a specific notice that the person is interested in?
Yes. They wanted guidance to the CDBG CV and the ESG CV.
Most of the guidance is available on the HUD exchange. The CDBG information and further guidance regarding the duplication of benefits is really the only thing we're waiting for. If the person has any further questions, I suggest they contact either their local community development office or their community planning and development representative.
Thank you, Hilliard. The next question I have is for Patty. Are all housing authorities staffed during the pandemic?
Not all housing authorities have staff in the physical office. However, staff can be reached if needed and should have some contact information available.
And they're mostly occupied right now with food distribution and emergency services, correct?
Correct. Some of the staff are still working in the offices, but they may have the offices locked. Others are working from home, and they put contact information on the door.
Okay, thank you, Patty. The next question I have is for Charles. Is there any financial relief available for market rate renters affected by COVID-19 in multifamily housing projects?
And so there is not any direct assistance available. Under Section 4023 of the CARES Act, there is the evictions protections, but any rent not paid during the period. So if an individual is unable to pay rent during the period, they would still owe that rent. The fees would be waived, late fees would be waived, but the tenant would still be responsible for the payment of back rent. And then I also received one question, and I think it came across privately, and so I'm unable to answer it online, but it was families that live in Section 8 housing, and those families now have zero income, and so HUD has funded more to the Section 8 program. The property the tenant should report their loss of wages or their change in job status to the property and do an interim recertification, so they would change their employment status or their employment income down to the current level to have their rent adjusted. So if an individual had lost their job related to COVID, they would become a zero renter and their rent would be that $25 minimum.
Okay, thank you, Charles. The next question is for Hilliard, and it's asking about CDBG. Can it be used for emergency assistance to homeowners and renters?
The quick answer is yes, but it's not the most appropriate vehicle to assist homeowners and renters. That would be the home program. The CDBG program can provide emergency assistance for up to 3 months.
Thank you, Hilliard. Are there any other questions on the chat line? I'll wait just a minute here. Okay, I think that's the end of the chat line. I'm going to turn it back over to Teresa. This concludes today's webinar question and answer session. Any questions that aren't answered will be posted on our website. I will now turn it back over to Ms. Green for concluding remarks. Thank you.
Thank you so much, Mr. Shaw. Again, if we do not get a chance to answer some of the questions that were submitted by chat, we will contact you directly or send out the answers to all of the questions by the end of the week. We'd like to thank you all for participating in today's webinar. Information on how to obtain a copy of today's webinar will be provided to all participants by the end of the week. This concludes today's webinar.
Thank you. And this concludes today's conference. Thank you for participating. You may disconnect at this time. Speakers, please stand by for post-conference.